Welcome back. You're tuned into Bazaar Morning Call. Well, Dipan Mehta, Director at Elixir Equities, joins us to help us out with some fundamental analysis. Hi, Dipan. Good morning and good to see you in. Well, what do you do with Kotak Mahindra Bank? High quality name. The solace is that it's not rallied. It's not seen a big outperformance. But this news is clearly a negative out there. It'll slow down their growth, and also if the unsecured book does slow down, it could have an impact on margins. Your take?
Good morning, Nigel, and thank you for having me on your show. Yes, I think very negative news for Kotak Bank. But look, it's a solid institution and a very strong brand. And these kind of setbacks are temporary. I'm sure they'll work around it in terms of technology and in terms of their capability to execute. Kotak Mahindra management has an excellent track record. So this could be a passing phase. But yes, I think sentimentally the stock will take a drubbing today.
Okay, sentimentally the stock will take a drubbing, but you're saying for people who own Kotak Mahindra Bank in their portfolios, one shouldn't be too worried, right?
Yeah, good morning, Sonia. Whenever there's a correction in the stock price and I expect 4 or 5% up for correction, it does cause a lot of angst amongst investors, especially Kotak Bank would typically be amongst the part of the core holdings of many investors, being a large bank and having created so much of wealth. So, if you are holding it for past 5-10 years, anyway, it has rallied and become a large part of your portfolio. So certainly it will dent the returns for on a cumulative basis. And these kind of developments do tend to, does shake the investor a little bit. But if you have a longer term view and expect that the management has the capacity and the capability to resolve these compliance issues, then the bank should come back more than ever strongly on a more stronger tech platform and hopefully be able to avoid, such setbacks in future.
But the problem, here is that if you remember, HDFC Bank also saw a big derating, right, after RBI's action had come through. So the problem is that even if you have a long-term view, is there an opportunity cost elsewhere? Because, names like Axis Bank are doing so well in terms of numbers, etc. So that was my only point. Your thoughts?
At the end of the day, I think, there's always a rolling leadership amongst the banks. Today, Axis Bank did well. Tomorrow it will be Kotak Bank and then HDFC Bank and ICICI Bank's turn also comes. There was a time for several years where HDFC Bank and Kotak Bank, had best-in-class performance, and ICICI and Axis were kind of struggling. So this kind of churn does keep on happening when you start to rate the performances. But end of the day, I think these are great institutions. There's secular growth story still over there, and if you expect India's GDP growth rates and corporate profits to grow the way they are, then private sector banks certainly have a very important role to play. The balance sheet size certainly can support credit growth within the country. So I'm not too perturbed about longer term growth rates for any of these banks. It's just that over the short term, maybe they're overowned, maybe there's a liquidity issue because of which their NIMs are being compressed, over ownership. There are many factors, but by and large, I think if you just look at the longer term trajectory 3 to 5 years from now, these companies will be significantly larger than what they are just now, and there's adequate headroom for growth.
Dipan, hi, morning. Rolling leadership, right? That's, I think, the absolute apt way to describe it. Rolling leadership in the market as well. Something or the other is always there performing, and that keeps things up when something is not performing. Now, from yesterday, I wanted you to react to a few names because there is, in a way, a different kind of rolling leadership here, right? Momentum has been strong in the broader market. So, comment if you will. UBL ended 10% higher. That's United Breweries, the beer company. You had these standalone refiners, CPCL, MRPL, which were sharply up. If you want to sort of weigh in on that. Not many cows track it, but react. It's never small. It's always big when the stocks move, those two. And then metals, SAIL was up 10% and a bunch of other metal names as well, if you want to. But start with UBL, Dipan.
Yeah, Prashant, good morning. I think UBL, if I'm not mistaken, numbers also came through. And
Heineken reported numbers. And they kind of said that India business volume growth is in the low teens, is what they said. So it would be higher than the last couple of quarters if it were to be in that vicinity. Yeah.
That's right. And also it's a sweltering summer. So you can expect beer sales to do extremely well in the next quarter. That's the current quarter as well. And look, United Breweries, I think is really a very strong pick among the Alcobev segment. It has got a very high market share, I would say less competitive intensity as compared to United Spirits. which has to deal with many of the strong local players, and then there is an international player also which is competing. Whereas UB per se has got, I would say, slightly less competitive environment, and there's always hope that some relaxation in regulation may permit more sales points for beers, and that benefit United Breweries, and it does therefore trades also at a premium multiple. But look, investors wanting to get into an allocation in the FMCG space, then you have to work through stocks like UBL, maybe a Tata Consumer, which have a significantly higher growth rate. So I think that the move is justified, but the stock is quite expensive.
Yeah.
Mehta, Dipan, final question before we let you go. What about Dalmia Bharat? You didn't like any of these cement companies, but the stock is opening up lower. It's already down 20%. 20-25% lower. Do you like it, or will you still avoid?
No, Nigel, I would still avoid cement at this point of time. And I think the competitive spirit and the way the capacities have been enhanced, all those dynamics are coming into play over here, where volumes have been good, but because of lower pricing, these companies are going to have reporting profits which are lower perhaps. And look, on the other hand, also fuel costs are going up for them. So I think they get into very tricky territory, all the cement companies at this point of time.